Welcome to Voyage Daily Tech, the most important news personalized for you every day, supported by Voyage.com.
After listening to today's news, you'll know. First Bloom Energy's stock soars 400% as its fuel cells become the private power source for Silicon Valley's AI data centers. We'll analyze why this on-site power trend is a turning point and how it could affect public grids and the AI industry's supply chain. Second, Google's Universal Commerce Protocol ignites a $5 trillion war with OpenAI and Amazon to control how AI agents shop online. In this episode, we'll break down Google's open source strategy and what it signals for the future of retail and online advertising. Third, TSMC's $15 billion quarterly profit cements its role as kingmaker, while Apple and Nvidia battle for its 2nm AI chip capacity. This discussion will reveal how TSMC's monopoly connects to the AI arms race and what it means for the global semiconductor supply chain. Fourth, the new US-led Pax Silica alliance unites the UAE, Qatar, and Israel to build a semiconductor bloc rivaling China and the EU. So we'll discuss why this silicon statecraft matters and what it means for Middle East economies and the escalating global tech Cold War. Fifth, AI models are now fooled by human optical illusions, a breakthrough revealing both critical security flaws and secrets of the human brain. Today, we'll take a closer look at this AI vulnerability and its implications for autonomous systems and the future of neuroscience research. The most unexpected story in the tech world today has to be about a company that was once considered unremarkable, with a stock price flat for years, that just skyrocketed 400% in the last 12 months. The reason? It's become the go-to power source for the electricity-guzzling AI data centers that are popping up everywhere. As the CFO of OpenAI famously put it, the real bottleneck for AI isn't money, it's power. We recently focused on how some players are trying to own more of the stack building or even buying their own power plants. And the latest development is a surge in demand for vendors that can drop reliable power, right? Where the racks are there. Bloom's secret is something called a solid oxide fuel cell. It's a box that takes in fuel, usually natural gas, and through a quiet, clean electrochemical process, it generates electricity right on site. What's remarkable is that this allows these massive data centers to build their own private power plants, completely bypassing the public utility grid, which is already strained to its breaking point. This isn't just about more power, it's about reliable, independent power. Continuing our last discussion about XAI leaning on natural gas turbines in Memphis and Meta funding next-gen nuclear, the situation this time is somewhat different. Bloom offers a modular on-site path that doesn't require building an entire gas plant or waiting years for a reactor. And Bloom Energy is cashing in. One single data center project in Wyoming is expected to bring in $3 billion in revenue. Utility giant American Electric Power just dropped $2.65 billion on a deal for Bloom's fuel cells. But that's not the whole picture. Brookfield, the world's largest AI infrastructure investor, signed a $5 billion partnership with Bloom's CEO calling his company the preferred on-site provider for their entire portfolio. A few days ago, we mentioned some companies moving to vertically integrate their energy. Today, there's another important update. Others are opting to outsource that control to Bloom as a third-party on-site provider. So the thing is, we could be seeing the start of a two-tiered power system. As tech giants build their own reliable energy islands, the public grid they've left behind could suffer from underinvestment, potentially leaving regular homes and businesses with less stable, more expensive electricity. And here's the other hidden risk. The supply chain. These fuel cells rely on rare earth materials like yttrium and scandium, and nearly 90% of the world's supply is controlled by China, which has already started restricting exports. This exposes the entire AI industry to a new geopolitical choke point, much like the world's reliance on Taiwan for semiconductors. We previously analysed the local pushback around XAI's Memphis build-out. If private energy islands keep multiplying, expect that same scrutiny to shadow wherever these clusters land. And the situation gets even more volatile. While revenue is soaring, the company's profitability is still modest. The stock has made moves greater than 5% on 76 different days in the last year alone, making it one of the priciest energy stocks at 125 times forward earnings. The reason this valuation is raising eyebrows is that 125 times forward earnings is what you'd expect from a high-growth AI software company, not an industrial manufacturer. For comparison, This is similar to the sky-high valuations seen in pick and shovel plays like Cisco during the dot-com bubble. To justify this price, investors are betting that Bloom can achieve a staggering 53% revenue growth year after year through 2030, capturing a massive slice of the AI power market without any major slip-ups. This all begs the question, what's the real endgame here? Wall Street is completely divided. Bulls see a company set to dominate a $7 trillion market, but the bears are sounding the alarm. Bank of America analysts warn the market is paying today for a decade of delivery and treating potential deals as guaranteed wins. When it comes to competition, some analysts are almost dismissive. One said rival fuel cell energy is 10 or maybe 15 years behind on technology from where Bloom was 10 years ago. Now, get this, the long-term power race is just getting started. While Bloom has a first-mover advantage, other massive players are entering the field. GE is developing next-generation turbines that can run on 100% ammonia by 2030, and the nuclear industry is racing to commercialize small modular reactors, or SMRs, which could provide huge amounts of clean baseload power. We previously covered how Meta is directly funding advanced nuclear designs like TerraPower and Oklo, and how nuclear is getting a policy tailwind after being labelled green in parts of Europe. So if SMRs arrive on time, that could narrow Bloom's window. This high-stakes gamble on the AI power grid has turned Bloom into a first mover with massive deals. But with a valuation that assumes years of perfect execution, one analyst summed it up perfectly, this is not a stock for the faint of heart. As we've discussed before, control over power is the new choke point, and Bloom is right at the center of that bet. Well, speaking of the infrastructure powering the AI boom, a different kind of tech war is brewing, and it's shifting from physical power plants to the digital rulebook for how you'll shop for everything in the future. The prize is worth an estimated $5 trillion. A while back, we talked about how OpenAI was trying to win with capital as a moat, planning over $1.4 trillion in AI infrastructure, including that Stargate supercomputer push. So keep that playbook in mind as today's battlefront shifts. Google just fired its biggest shot yet, launching something called the Universal Commerce Protocol. The company isn't just building another shopping app, it's trying to write the entire rulebook for how AI agents will buy things for you online. The goal is to create a single open source standard that every retailer can plug into, from product discovery all the way to checkout. This isn't just about one app versus another, it's what experts are calling a protocol war. The goal is to create the one universal language that all AI shopping agents use to talk to all online stores. Think of it like the old battle between VHS and Betamax. The winner didn't just sell more players, they controlled the entire movie industry because their format became the standard. By creating an open source protocol, Google is inviting everyone to build on its foundation, hoping its system becomes the one standard to rule them all. In other words, while some rivals are racing to dominate with raw compute and capital, Google's counter is to win with a standard everyone else adopts. This is a direct challenge to a field of powerful rivals. OpenAI, the creator of ChatGPT, is already building its own system with Stripe. The AI search engine Perplexity has partnered with PayPal to let you buy things right inside its chat. And Amazon has its own AI agent, Buy For Me, that can purchase products from other websites on a shopper's behalf. We previously analysed how this consolidation is being fueled by historic spending. SoftBank, for example, wired roughly $40 billion into OpenAI at a $260 billion valuation just last week. So these war chests are now being pointed squarely at commerce. Interestingly enough, Amazon's Buy For Me agent has sparked significant backlash from smaller retailers. Many reported their products were being listed and sold through Amazon without their permission, causing chaos with inventory and customer service. This is a key reason why Google might be seen as a more palatable partner right now. This is a battle for total control of the AI-powered retail market, which McKinsey predicts could be a $3 to $5 trillion opportunity by 2030. But Google isn't just building a platform, it's building an alliance. It co-developed its new protocol with retail giants like Shopify, Etsy, and Target, creating a powerful coalition from the start. Continuing our last discussion about how only a few mega corporations could control AI if capital becomes the deciding factor. The situation this time is somewhat different. Google is trying to distribute power by turning retailers into stakeholders in an open standard while still keeping the rails under its control. Here, Google is playing a very different game than Amazon. It's positioning its universal commerce protocol as an open ecosystem, not a closed walled garden. By developing it with major players from the start, Google is building trust and making it easy for anyone to join. The strategy is to become the essential neutral infrastructure for everyone, which is a powerful way to achieve dominance without looking like a bully. This is where the situation takes a more complex turn. A Google vice president went on the record stating, "Our role in the ecosystem is that of a matchmaker, and one way is with ads. The real end game is hidden in plain sight." Google is already testing a new feature called direct offers. This will let retailers push unique discounts directly to you inside Google's AI chat when you show an intent to buy. And make no mistake, this direct offers feature could signal the beginning of the end for the classic list of blue links we've used for decades. Research shows that AI-generated answers in search results can cause publisher website traffic to plummet by as much as 60%. For an industry that relies on those clicks for ad revenue, that's a potential $2 billion loss. Google is essentially risking its own core business model for a shot at something even bigger. Google is positioning itself not just as a player in the new world of AI shopping, but as the central toll booth. By creating the standard everyone uses, it ensures it can power the next generation of advertising and get a piece of the action. And this is where it gets really risky for Google. The company is already under intense antitrust scrutiny from regulators worldwide. In fact, a US federal court recently found Google guilty of monopolizing digital ad technologies by creating a universal protocol that centralizes so much data on what we want to buy, when, and for how much. Google is essentially building what some are calling an antitrust honeypot. Remember, we've already seen how capital as a moat can concentrate power at unprecedented scale. Regulators will now ask whether a standard like this is a pro-competitive unlock for retailers or just a more sophisticated way to cement dominance. We were just talking about the strategic battles between software giants, but beneath it all, one company is quietly supplying the weapons for every side of the war. Let's start with a single statistic that might just change your entire perspective on this AI build-out. TSMC, the world's largest manufacturer of advanced AI chips, is expected to report a staggering 27% jump in net profit, hitting over $15 billion in a single quarter. A while back, we called out the debate over whether the AI build-out was a mirage or the real thing. Today's update is the foundry-level proof that demand is showing up in hard revenue, not just accounting. This isn't just a good quarter, it's the company's 8th consecutive quarter of profit growth. And as we mentioned last time, TSMC's 3nm lines are essentially maxed out, driven in part by Apple's next A series chip bound for the iPhone 17. This surge has cemented TSMC as Asia's most valuable listed company, with a market capitalization of around $1.38 trillion. To put that number in perspective, that's more than double the value of its rival, Samsung Electronics. TSMC is the critical supplier for giants like Apple and Nvidia, making the chips that power everything from the next iPhone to the AI data centers, changing our world. Remember our brains versus bodies framework. The US and its allies still control the brain's advanced AI chips, and TSMC sits right at that choke point. Continuing our last discussion about bottlenecks, the choke point isn't just HBM memory, it's also leading edge wafer starts. The situation presents a fascinating duality. On one side, you have Apple needing TSMC for its seasonal product launches, while on the other, Nvidia needs a non-stop supply for the AI revolution. In fact, Nvidia's CEO Jensen Huang has said, without TSMC, there is no Nvidia today. It puts TSMC in an unbelievably powerful position. If that was just the appetizer, the main course is just being served. Demand is accelerating so fast that analysts are now forecasting TSMC's revenue to grow up to 30% in 2026. One expert points to the explosive growth of the AI server accelerator manufacturing market, which itself is projected to grow 78% in a single year. That lines up with what we said about the HBM squeeze. A memory bottleneck can slow deployments at the margins, but the appetite for accelerators is still vacuuming up every leading edge slot. TSMC can run, and that AI server accelerator market isn't just NVIDIA anymore. We're seeing a custom AI silicon boom. Tech giants like Google with its TPU chips, Amazon with its Trainium chips, and Microsoft with its Maya chips are all designing their own specialized AI hardware to reduce their reliance on NVIDIA. And who is manufacturing all of these different, incredibly complex custom chips? You guessed it, TSMC. They are the foundational layer for this entire competitive ecosystem. And as we noted a while back, the on-device AI push NPUs. More RAM adds even more silicon content per device, stacking on top of this data center wave. Meanwhile, under the export control regime we covered, Chinese players are sprinting to build domestic accelerators. But for now, at the very leading edge, TSMC's calendars are dominated by Western hyperscalers. This is the core of the power struggle in tech right now. As one market strategist put it, TSMC continues to gain share at the leading edge, where competitors are struggling to keep pace. While others fight for AI dominance, TSMC is building the foundational hardware. Now, that leading edge means something very specific. We're talking about the race to the 2-nanometer chip node. This is the next frontier, offering up to 15% higher performance and 30% better power efficiency. And right now, TSMC is effectively the only game in town. They are becoming the de facto kingmakers of the AI race. They have about 15 customers lined up, but here's the kicker. Apple has already reserved over 50% of TSMC's entire initial 2-nanometer capacity for 2026. This shows you how TSMC's decisions on who gets these chips and when can literally shape the future of technology. And yes, we recently talked about Washington elevating Intel as a national champion, but at 2-nanometer, TSMC's cadence keeps it firmly in the driver's seat. To meet this demand, the company is investing a colossal $165 billion in new chip factories. This investment isn't just about building more factories in Taiwan. A huge part of it is about geopolitical strategy, like their new factory in Arizona. You might think building in the US would be way too expensive, but thanks to massive automation and government incentives from things like the CHIPS Act, the cost to produce a chip in Arizona is only about 10% higher than in Taiwan. As we said, when Intel's deal came together, those same incentives are reshaping everyone's calculus, TSMC included. This is a strategic trade-off, a small hit to their profit margins in exchange for a more resilient and politically stable global supply chain. In the global gold rush for artificial intelligence, the company making the shovels isn't just winning, it's cornering the market on the entire gold mine. And for anyone betting the boom was paper thin, this is the kind of cash flow reality that's hard to short. That geopolitical strategy we just mentioned with TSMC's Arizona plant is actually part of a much bigger picture. A new alliance is forming that could rewrite the economic map of the Middle East. Qatar and the United Arab Emirates are officially joining a US-led technology pact, and who else is in the group is the real story. It's called Pax Silica, a coalition focused on one thing: securing the global supply chain for semiconductors and artificial intelligence. This isn't just another trade agreement. Believe it or not, it's a strategic move in a global tech Cold War. Pax Silica is being positioned as a direct competitor to other major blocs, like the European Union's CHIPS Act and China's massive push for technological self-sufficiency. We are seeing the world's technology supply chain split into rival factions, and this alliance is drawing a new line in the sand. But this isn't just about computer chips. The initiative brings the UAE and Qatar into the same technology-focused economic framework as Israel, Japan, South Korea, and the UK. It's a move a US official says is notable given the region's history of political divisions. And the vision is absolutely huge. According to Undersecretary of State for Economic Affairs, Jacob Hellberg, this marks a fundamental shift for the Gulf nations, moving from a hydrocarbon-centric security architecture to one focused on silicon statecraft. This silicon statecraft is a high-stakes gamble for the UAE and Qatar. Why? Because their biggest energy customer is China, the very country this alliance is designed to compete against. In 2023 alone, Gulf nations sent over 200 million metric tons of crude oil and 18 million tons of natural gas to China. At the same time, their sovereign wealth funds are pouring billions into US tech and AI. They are trying to balance their old money from oil with their new money in tech, and it's a very delicate tightrope to walk. This isn't just talk. Hellberg calls the agreement an operational document for a new economic security consensus. The group is already planning strategic projects, including an industrial park in Israel called Fort Foundry 1, and using advanced US technology to modernize trade routes like the India, Middle East, Europe corridor. The real challenge and the opportunity will be merging completely different ways of innovating. You have Israel's famous startup nation culture, which is very bottom-up and driven by venture capital. Now, you're mixing that with the top-down state-led investment models of the UAE and Qatar. Making these two different engines work together smoothly on sensitive projects will be one of the biggest tests of this new alliance. And unlike traditional alliances, membership in Pax Silica is not just political. It's described as a coalition of capabilities driven by the industrial strengths each country brings to the table. The objective is to build a new economic security order among allied partners and reduce dependence on rival nations. When they say coalition of capabilities, it's easy to assume the Gulf states are just providing the cash, but that's not the whole story. Actually, they are developing unique specializations. For instance, Qatar is partnering with a world-leading research firm to build a regional hub for semiconductor research and development. The UAE, meanwhile, is leveraging its massive investment in green hydrogen to solve one of the chip industry's biggest problems. It's huge energy consumption. They're positioning themselves to provide the sustainable energy needed to power the foundries of the future. They're bringing much more than just money to the table. The goal is clear: accelerate the Middle East transition away from energy dependence toward a diversified, technology-driven economy. This is a US-led strategy to create a new consensus built not on oil, but on silicon. We've been talking a lot about the hardware and geopolitics powering AI, but now let's shift our focus to the mind of the machine itself. It turns out artificial intelligence, the same technology designed to spot details that humans miss, is now falling for the exact same optical illusions that trick our brains. This finding has huge implications for AI safety and cybersecurity. If a simple static image can fool an AI, bad actors could design physical environments or digital content that uses these same principles to reliably deceive critical AI systems. Think about a self-driving car. Researchers have already shown that by projecting specific light patterns onto the road, they can create ghost images that cause an AI to slam on the brakes for an object that isn't there, or worse, fail to see a real pedestrian. This vulnerability is a serious concern. And this isn't a bug, it's a breakthrough. Scientists have discovered that this AI vulnerability is a backdoor into understanding the human mind. A lead researcher put it bluntly: conducting experimental manipulations on the human brain raises serious ethical concerns, but no such restrictions apply to artificial models. In other words, they can now experiment on AI to unlock secrets about us. One AI model called PredNet was trained on around 1 million video frames to learn how the world works. It was never shown an optical illusion. Yet when presented with the famous rotating snakes illusion, the AI perceived the static image as moving, just like a human. Researchers believe this supports a leading theory that our brain is constantly predicting what it expects to see, rather than just passively receiving information. When an image has features that hint at motion, our brain's prediction system gets triggered. However, if you zoom out, you'll see a hot debate emerging in the scientific community about the risk of circular reasoning here. If you build an AI model based on the principles of a specific brain theory, like predictive coding, and it then behaves according to that theory, is that truly independent proof? Or did you just build a machine that confirms your own assumptions? It's a critical question that researchers are grappling with, because the goal is to find genuine evidence about the brain, not just create an echo chamber for existing theories. What really brought this to a head was the next development. Some scientists are now combining AI with the weirdness of quantum physics to explain these phenomena. They're exploring a wild idea called quantum cognition, suggesting our perception of an ambiguous illusion, like the Necker cube, is similar to Schrödinger's cat. Now, to be fair, this is a very new and controversial field. Skeptics argue that using quantum mechanics to model thought is just a metaphor stretched too far, that a classical computer model can explain these things just as well. But proponents argue that classical models fail to capture the weirdness of human decision-making. They believe that concepts like quantum superposition, where a particle exists in multiple states at once, can mathematically model how our brain holds two conflicting interpretations of an image at the same time. The image could, in essence, be in two states at once until our brain chooses to perceive one. An AI model built using this quantum theory was trained on these illusions. When shown an image, it began switching its perception between the two interpretations, and the time intervals between these switches were remarkably similar to those of human test subjects. You know, the implications aren't just for science labs. There's a growing commercial interest in creating AI with these human-like flaws. Imagine a more relatable robotic companion that shares your cognitive biases, or a user experience testing tool that can predict where a human would get confused. This is a whole new frontier. While AI is far from seeing the world exactly as we do, this research is not just about making smarter machines. It's about using artificial intelligence as a revolutionary and ethical new tool to finally decode the complex and mysterious workings of the human brain.
That's it for today on Voyage Daily Tech. Follow, share, and stay tuned for daily updates coming your way tomorrow.